We're watching shares of Strategy. You can see they're up over 3.5% in the pre-market after the MSCI issued a surprise early decision not to exclude the digital asset treasury from and those companies from its indexes. Taking a look right now, again, Strategy up just about 3.5%. Mackenzie Sagalas joins us from the NASDAQ with much more on this story. Mackenzie, good morning.
Hey, good morning, Frank. So this was the overhang that investors had been bracing for. MSCI had been weighing whether companies holding more than half of their assets in cryptocurrencies should be treated like investment funds, which are typically barred from its indexes. JP Morgan estimated that kind of exclusion could have triggered nearly $9 billion in passive outflows from Strategy alone if other providers followed suit. But in a surprise early decision, MSCI said it's keeping the current treatment in place, at least for now. The firm adding that distinguishing between operating companies and those that mainly hold crypto requires further research and consultation with market participants. So the door, it is not closed, but the immediate risk is off the table. Now, the relief trade is mixed across the wider digital asset treasury group. Take a look at Ether proxies like Tom Lee's Bitmine Immersion and SharpLink. They're both a touch lower in pre-market trading, but Bitcoin Treasury 21 Capital trending higher ahead of the open. Really, though, Frank, the bellwether here is Strategy. Its entire model depends on index eligibility. The stock fell around 50% last year. Its NAV premium collapsed, and the company has been stockpiling cash instead of buying Bitcoin, which is a defensive move we haven't seen from Chairman Michael Saylor before. So for now, it's a reprieve, but the broader stress test for Bitcoin's biggest corporate proxy, not over yet.
All right, so Mac, this actually started back in October, I believe, when MSCI first announced that it was considering this. What's changed between now and then, and the fact that they actually issued an early decision?
So the first thing that changed is that the digital asset treasury contingent, that DAT trade, a lot of them came together and reached out to the index directly, issuing this 12-page letter. Michael Saylor making the point that they were being treated differently from other companies that hold commodities like oil on their balance sheet. And so essentially we just saw this massive pushback. And so the trade group, coming in force. And so the index is saying that they haven't made a final decision on this. They are just putting it off at this point. So that's really one piece of this puzzle. And what's been fascinating about the DAT trade is that it was among the hottest moves in equities over the summer. And now many of them have lost their net asset value. So that premium that stock investors were paying to hold the equity instead of the digital asset itself, a lot of that has fallen. And so when people look at the use case of owning Strategy instead of just holding Bitcoin, it really comes from the fact that it trades at a premium to the average value of the Bitcoin it holds on its books, about $62 billion in Bitcoin at around 75K price point. That was coming down.
Mackenzie Sagalas, live from the NASDAQ. Mac, always good to see you. Thank you very much.